4 consecutive weeks of gains from for oil in the month of November. What does that tell us about what the street, what investors are expecting OPEC leaders to do?
I think, good morning, Simi. I think what investors were expecting is really twofold. I think one that your analyst just said earlier, I think just on the supply side, they were expecting some cuts at these meetings either today or tomorrow. Right now you have 7.7 million barrels voluntarily cut by OPEC. It's almost 10% of demand. So I think they were either counting on one, this extension or kick down the road, at least the majority of that. And number two, with the vaccines we've heard about in the last few weeks, I think the thought is that the demand is going to come back sooner than expected. So we really have to see these two things, both the supply side of OPEC continuing with these OPEC plus with these voluntary cuts, but also the demand coming back. And I think the market is starting to price in both to a degree.
Yeah. Is there a chance that OPEC leaders are not wanting to make a decision right now because they're still unsure what Biden's administration will look like, who he will pick as energy secretary, which could play, a big role in the role that the U.S. plays going forward in energy demand and, continuing the imports and exporting of gas and other commodities?
Absolutely. Sim, I think that's a good point that if the Biden administration does come in and decide to put some things, you've heard about different things on federal acreage, the international oil companies could find themselves at a slight advantage from a pricing aspect. So if I'm some of them, maybe I do wait. Again, a lot of these U.S. companies, we've seen a lot of capital discipline, but they could be forced to have even more capital discipline if, let's say, on federal acreage, either offshore or somewhere onshore, you have additional cost placed on you. It's going to make it more challenging for some of these U.S. producers. So again, it might be beneficial to some of the internationals to wait and see what kind of policies the administration and other sort of costs that the Biden administration places on them.
Top pick in the energy sector in terms of gas and oil producers?
Right now for oil, ConocoPhillips, they just about to wrap up really their deal with Concho. I think they're in the driver's seat. Again, they can really flex their operation as needed depending on pricing. Balance sheet great, production great. That's number one, and number two, EOG Resources. Both these companies to me have tremendous acreage, and what's key for both is they can make money all the way down to the low 30s, high 20s, where a lot of other E&Ps cannot make a profit, even at today's $45 oil.
Lastly, on the topic of geopolitics, the assassination of a top nuclear scientist in Iran and the prospect of retaliation, how are you squaring that news and what it could mean for energy?
Well, that was kind of a key coming in with the Biden administration, how the policy and what they're going to do or be how friendly to that, because again, Iran and it is in Iraq could certainly bring more oil production. Has suggested they'd bring more oil production back online. So again, if you have tighter policy against those two, maybe that the one effect on oil would be continued sort of scrutiny on those two, which would limit what they can produce. So a net benefit for pricing overall.
Shepard Smith here. Thanks for watching CNBC on YouTube.